This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jorge Newbery of AHP Servicing. George, thank you for joining us.
Thank you for having me.
Can you tell us a little bit about how you got into early stage investing?
Basically, we needed to find a new source of capital to buy loans. What we do is we purchase pools of defaulted mortgages from banks, and we were doing some smaller JVs with different individual investors, and we needed to find we needed to create a fund because we were bringing money in, giving it back, bringing money in, giving it back, and generating good returns, but it didn't seem as scalable or smooth. And it became almost a little bit annoying sometimes where investors would invest with us and 6 months later they got their money back and, hey, wire for this new project. They just like to have it, give us the investment and we just keep paying them a return on it. And so we evolved into a fund and we've gone from there and explored multiple different structures for these funds, and most recently we're on to Regulation A+, which seems to be the best of the bunch so far.
Well, can you tell us about your experience in doing Reg CF and Reg A+ raises? What were the advantages and disadvantages of those?
The huge advantage for Regulation A+, which is what we're raising money into now, is that we can accept accredited investors. That's our market for all our prior funds was accredited investors only. So a pretty small percentage of the population, maybe 5%. And so we always struggled a little bit, even once we started doing Regulation 506C, which allowed us to market, generally solicit, but didn't allow us to accept anyone except an accredited investor. So we try to market, but really target that marketing towards high net worth accredited investors. And as a result, but we'd still hit non-accredited investors. They call, hey, I'm interested in investing, and we just couldn't accept their money. And with Regulation A+, almost everybody in America, every adult is a potential investor. And we make it as accessible as possible. Our minimum investment is only $100. So just about anyone can invest. And so when we market, we're cognizant. Everyone who hears our message is a potential investor, just about. So that's the big advantage.
Well, that sounds great. And what fund are you on right now, and what's coming up next for you?
So we are working on the Regulation A+ fund. It's American Homeowner Preservation 2015 A+ LLC. And we actually only have another month. It closes out May 24th. So that's the last time, it's even less than a month, that we can accept money into that fund. Then we're working actually on a new application to the SEC for AHP servicing. We're in the process of becoming a national mortgage servicer. And that servicer will also buy loans, which they'll service as well. And so those are the two. That's the next initiative. So there'll be some downtime, unfortunately, where we probably won't have any available investments for a few months. But at some point later this year, we expect to have HP servicing offered via Regulation A+.
And so what's the next step for you guys as far as growing the business and getting the fund big? How big is the current fund that you're raising, and where do you plan to go to next?
So we can go to $50 million. That's our limit on how much we can raise in our current fund, and we've gotten about halfway there. So we'll probably hit 30 by the time it closes, maybe even a little bit more. I'm not sure if we're going to hit 50. But either way, we've matched our acquisitions pretty well with what we've raised. And the real estate market, we buy defaulted mortgages, but the defaulted mortgage market has pretty much tracked the real estate market and even the equities markets to some extent, where the last few years have been very competitive. There's been a lot of cheap money flowing around. And as a result, what we've had to pay for loans has gone up. And so it wasn't nice to have the 50 million, but if 20 million is sitting in the bank earning zero, that would probably negatively impact our returns. So we're kind of happy with how this has grown. And, hopefully AHP servicing, once that's up and running in terms of the Regulation A offering, at some point another downturn hits and we could use all the money we can raise. But that hasn't been the case for the past 2 years when we've been raising money into our current fund.
Well, it sounds like you're getting a lot of traction with unaccredited investors. Is it the fact that is a certain fundraise size or investment size that attracts them, or is it the income quality, or what attracts the unaccredited investor over the accredited here?
Well, we definitely have, to be clear, we have a lot of accredited investors still. And I think they go in for the returns. I mean, we pay the first 12% to investors, so that's attractive. We distribute monthly, so that's attractive. We have a good track record of doing this. Our returns are strong. We just finished our audit for last year. We generated just over 40%, so our returns are good. And the prior year was 39%. So we're generating good money, which makes it comfortable for us to pay out the first 12% to investors. So I think investors are attracted by that. We also have a social mission. We started out initially as a nonprofit organization 10 years ago, with the mission of keeping families at risk of foreclosure in their homes. We're now a for-profit, but we still have that we're still socially mindful, and our goal is to do the right thing for the homeowners and all stakeholders in these transactions. So I think investors come to us for all sorts of reasons, whether it's financial, social, or simply if you're a non-accredited investor. In many cases, you have very few options. So I think we're some people find us the most attractive or one of the more attractive options amongst those that are offered to non-accredited.
That sounds great. In the minute or two we have left here, what else should we cover that we haven't about your fund?
So people often ask, why do we accept investments as low as $100? I mean, when we first started as a Reg B fund, we accepted, our minimum investment was $250,000, and then we went online. It went to 506C. It dropped to $10,000, and now we're all the way down to $100. But I see it as a huge marketing advantage. Anybody who's exposed to our investment opportunity and then realizes it's only $100 to try it, and we've repeatedly see people start out at 100, and 6 months later they're back with 1,000, or in some cases tens of thousands or even hundreds of thousands. So it's a way to get exposed and kind of test ride the investment. So I think that's an advantage. Constantly asked that by other funds. They say, why don't you just raise it to 1,000? Actually, even internally, people say, what? Some of our team members, why don't you raise it to 1,000 or 5,000? Because it just would be more cost effective. Because we do sometimes get people invest 100, and that's really not the costs to administer that $100 investment are disproportionate. But I see it as a big marketing tool. So that's one thing of note. Regulation A, in terms of ease of use for investors, not only non-accredited investors, A, it's accessible, but B, for the accredited investors, as opposed to 506C, there's no need to actually prove that you're accredited or provide any documentation to that effect. So I think it adds a lot of ease of use. So it really is, in all experience of doing these online offerings, by far and away, Regulation A+ has been the most successful and scalable for us.
Where do you see Reg A+ going? You think it's going to become an industry standard for all raises, or do you think it's going to find application in niche markets like this one?
Yeah, that's a great question, and I don't know, but I do, being that it's not that costly. I mean, it costs us about $75,000 on a first one, mostly for legal and accounting fees, to just get to the point of launching the offering. Obviously, doesn't include technology or other types of costs, but just get the Reg A offering itself approved. Or it's not approved, it's qualified is the proper term by the SEC. So I think that's pretty achievable. I mean, some other structures are much more expensive. So that makes it accessible. $50 million limit, you can actually raise $50 million a year for 2 years. So you could raise $100 million conceivably from one offering with a little bit of extra work to do the extra $50 million. So you can raise a lot of money. You can raise it online. You can generally solicit. It's open to just about anybody. So I think all those things are huge winners. And the only word of caution I'd say is it seems like, hey, I've seen people do this, and even we were guilty of this at the very beginning, is that you launch an offering and you think, hey, we did everything right. People are going to flood and start investing with us. And unless your marketing's on and you have a message that resonates with potential investors, it is tough to get traction. So I've seen once you get it qualified by the SEC, that is basically, you're at the starting line. Some people kind of see that as the finish line. Now the money's going to come. Now it's the starting line. Now you need to market and attract investors to your offering.
Well, that's great. Well, I appreciate you sharing this information with us today. How best for the audience to get back in touch with you?
Sure. They can find us at AHP, so American Homeowner Preservation, AHPfund.com.
Well, great. We'll put that in the show notes so people can get back in touch with you. Appreciate your taking time to share that with us today. Quite interesting to see Reg A coming up and being used in bigger and better ways. But want to have you come back and maybe give us a follow-up after the raise is over and maybe give us a debrief then.
Sounds good. I appreciate you having me on the show.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.